Hi everyone, today we'll be going over accounts October-November 2021 paper 3 question number 6. This is structured paper 3 which consists 6 questions each of 25 marks and has a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes, and this question number 6 falls under section B, which relates to cost and management accounting. So without any further delay, let's get started. Jason lives in a town where a market is held regularly. Jason decided to buy a bus to take passengers to and from the market. He estimated that he could sell 200 tickets a day for $4 each. So each ticket would cost $4, and he expects to sell 200 tickets per day. He intended to run the bus for 3 years. He had the option of buying a newer bus, Bus A. So Bus A is going to be a newer bus, or an older bus, Bus B. Jason knew that the older bus would be less reliable and there would be more days each year when the bus could not run because of breakdowns and maintenance, which means that the older bus is going to require more maintenance because of frequent breakdowns compared to the newer bus, which is Bus A. It would also require more money to be spent on repairs, and the following estimated information was available. So we can see that initial purchase price of Bus A is $86,000, whereas the initial purchase price for Bus B is $45,000. This could be because of the fact that Bus A is going to be a newer bus, whereas Bus B is going to be an older one. Then the sale proceeds at the end of year 3, we are going to receive $28,000 for Bus A, whereas we are not going to receive any amount for the Bus B. Again, this could be because of the fact that Bus B is an older bus. Now, let's have a look at the days lost due to the breakdowns and maintenance for year 1. The days lost due to maintenance and breakdowns for Bus A is going to be 5 and Bus B is going to be 12. This was already mentioned above, as Bus B was older and it would have more frequent breakdowns as compared to Bus A. Same is for the year 2 and year 3. You can see that there are higher days for the breakdowns for Bus B. Then the cost of repairs and maintenance for year 1, year 2, and year 3. If we are to compare Bus A with Bus B, we can definitely conclude that Bus B requires higher repairs and maintenance due to the higher costs. Then other running costs were expected to be the same for both buses. Jason uses a cost of capital of 10%. So we can just understand the cost of capital to be an interest rate. So what we're saying here is that we are going to apply an interest rate of 10% because we are going to see this project for the 3 years, right? And if we're talking about 3 years, so we'll start from the present date, and the present date is going to be 0. So that's going to be 1, that's 2, that's 3. Since we are considering the cash flows for these 3 years, and we are about to compare these two buses, we need to bring these cash flows to the current time, which is time 0. And in order to do so, we will apply the discount factors. So the discount factors we use will be at the rate of 10%. Alright, and the rate is already given. So for year 1, that's 0.909. For year 2, that's 0.826. For year 3, that's 0.751. Alright, then the net present value of running Bus A was calculated as 18,900. Now for the first part, we need to calculate by completing the table in the question paper the difference in net present value between purchasing Bus A and Bus B. Let's have a look at the table given in the question paper. Alright, so we are given the year change in capital. So this change in capital just means the difference in capital between Bus A and Bus B. Change in receipts again means the difference in the receiving amount between Bus A and Bus B, and change in repairs means difference between the cost of repairs for Bus A and Bus B. And then we are required to find the total change, which we will figure out by adding these 3 columns, and then the discount factor, which is already given in our question. Then we multiply our total change with the discount factor in order to figure out our discounted cash flow. Then we'll add the total discounted cash flow in order to figure out the difference in NPV, because we are already calculated the total change in the cash flows, right? So if we're talking about discounted cash flows, that's going to be the difference between the discounted cash flows between Bus A and Bus B, so we can easily figure out the difference in NPV. Okay, for the first part, let's list down our years. So we know that we're operating the bus for 3 years. So that's going to be year 0, which is the present time. Then we have year 1, year 2, and year 3. And we're already given the discount factors as well. Let's write it down. So the discount factor for year 1 was 0.909, for year 2 it was 0.826, and for year 3 it was 0.751. So let's copy these 3 discount factors. And we noticed that there was no discount factor for year 0 because that is the present time and we don't need to discount it. So the discount factor for time 0 is always going to be 1. Then for year 1, that was 0.909. For year 2, that was 0.826. And for year 3, that was 0.751. Okay, now we can look for the change in capital and the above information. So capital is just going to refer to the initial purchase price. We already concluded that the initial purchase price for bus A is going to be greater than bus B because bus A is a newer bus compared to bus B. So we're just going to figure out the difference between these initial purchase price, and we're going to write it down in our change in capital column. So for this, that's just going to be 86,000 minus 45,000, which gives us 41,000. So that's going to be the change in capital. Let's record it. So that's in year 0 because we're investing that amount right now. That's 41,000. Then we again have the sale proceeds. We need to record that as well. So what we can see is that the sale proceeds for bus B, that's nothing, right? So we're only achieving the sale proceeds for bus A, which is going to be 28,000. So we are going to record this amount at the end of year 3 because we can see that sales proceeds is at the end of year 3. So we're going to record this amount of 28,000 for year 3. Let's do that. So for year 3, that's going to be 28,000, but we'll have to list it down in a bracket. Okay, now we can move towards figuring out our changes in receipt. We can figure out the changes in receipts by figuring out the differences in the days lost to breakdowns and maintenance and then calculating the amount lost in those particular days, because we already know that each day Jason expects to sell 200 tickets and the price for each ticket is going to be $4. So we can just multiply these two factors to the number of days or the number of difference in days between bus A and bus B in order to figure out our change in receipts. So clearly we can see that the days lost to breakdowns and maintenance for year 1 is higher for bus B. That's going to be 5 minus 12, which gives us -7. And if the days lost to breakdowns and maintenance for bus B is higher than bus A, it means that the receipts for bus B is going to be lower because we already lost our income for these 7 days and we just need to figure out that particular income. So we know that Jason is going to sell 200 tickets per day, and if we are to figure out the number of tickets for 7 days, we just have to multiply it with 200. So let's do that. Then we need to figure out the total amount, right? And each ticket costs $4. So we just need to multiply it with $4 as well. So the changes in receipts for the first year is going to be -7 times 200 times 4, which gives our total to be -5,600. Now we need to record this particular amount in our changes in receipts column. And since it has a negative value, we're going to record it in a bracket. Let's do that. So for the first year, that's 5,600. We'll repeat the same process for year 2 and year 3. So we can see that for year 2, the difference in days is going to be 9 minus 15, which is going to be -6. Again, we need to figure out the total receipts that we lost for these 6 days. So we're going to multiply it with the number of tickets sold per day, which is 200. Then we multiply it with the rate per each ticket. So that's $4. So the changes in receipts for year 2 is just going to be -6 times 200 times 4, which results in -4,800. Let's record this amount in our changes in receipts column. So that's going to be 4,800. All right, we have to repeat this again for third year. So for the third year, the difference in the number of days is just 1. So that's -1 times 200 times $4, which results in the total to be -800. Let's record this amount. So that's -800. Now we move towards figuring out our change in repairs. Let's have a look at the above information. So we're already given the cost for change. So we're already given the cost of repairs and maintenance for both bus A and bus B. In order to figure out the change, we can just figure out the difference. So for the first year, that's going to be 7,000 minus 9,000, which results in a -2,000. For a second year, that's 8,000 minus 14,500, which results in -6,500. And for the third year, that's 11,000 minus 17,000, which results in negative 6,000. So we just have to record these three amounts of 2,000, 6,500, and 6,000 in year 1, 2, and 3 in our column for changes in repairs. Let's do that. Again, remember that all three amounts are negative values, so we need to record it in a bracket. So that's 2,000, 6,500, and 6,000. Now, in order to figure out the total change, like I said before, we add these three columns. So for year 0, we do not have any values in change in receipts and change in repairs, so the total change is just going to be the change in capital, which is 41,000. For the first year, we do not have any change in capital, we only have change in receipts and change in repairs, so that's negative 5,600 plus negative 2,000, which results in negative 7,600. Let's write it down. For the second year, that's negative 4,800 plus negative 6,500, which results in a negative value again, which is of 11,300. Then for the final year, we have three negative values, so that's negative 28,000, negative 800, and negative 6,000, which results in a total of negative 34,800. Now, in order to figure out the discounted cash flow, we just need to multiply the total change by our discount factor. So for year 0, that's going to be 41,000 times 1, which is 41,000. For year 1, that's negative 7,600 times 0.909, which results in negative value of 6,908.4. For our second year, that's negative 11,300 times 0.826, which results in negative value of 9,333.8. Then for our final year, that's going to be negative 34,800 times 0.751, which results in the negative value of 26,134.8. Now, in order to figure out the difference in NPV, we just total our discounted cash flow. So we add these four amounts. That's going to be 41,000 minus 6,908.4 minus 9,333.8 minus 26,134.8, which gives our difference in NPV to be negative 1,377. All right, this concludes our first part. Now we can move to the second one. We were given the working section. Whatever workings we did above in the question paper, you guys should be doing it in the working section and not scribble all over the question paper like I did. Alright, for the second part, we need to calculate the net present value of purchasing bus B. So from the first part, what we figured out was that the net present value for bus B is 1,377 lower than the net present value for bus A. And the net present value for bus A was already given in our question, which amounted to 18,900. Now, in order to figure out the net present value of bus B, we can just subtract the difference, which is 1,377, from the total net present value of bus A, which is given to be 18,900. Let's do that. So, NPV of bus B is just the NPV of bus A, which was 18,900, minus the difference, which we figured out to be 13,077. So this gives our NPV of bus B to be 17,523. This concludes our second part. Now we can move to the third one. Calculate for bus A the sale proceeds receivable at the end of year 3, at which the net present value for the two buses would be the same. Let's have a look at the above table. Now, previously, we figured out our difference in net present value to be 1,377. Now, the condition given is that the net present value for two buses are to be same, which means that there is not going to be any difference. So the difference we require is just going to be 0. And in order for it to be 0, we need to figure out this change in capital value, right? We require the new value for which our difference in NPV will be 0. So let's suppose our new value of the change in capital to be y. So if this is y, these three values are going to remain the same, right? We just need to change this particular value. So that particular value is just going to be y minus 800 minus 6,000, because this is going to be the total change, which was negative 34,800 previously. And also remember that the value is in negative, so this y should also be negative. All right, so this is going to be our new total change. And if we are to multiply it with our discount factor, so that's just 0.751. And then add these three amounts for the discounted cash flows for the year 0, 1, and 2. Then we'll get the difference in net present value to be 0, right? Let's write it in an equation form. So we have the new change in capital to be minus y. Then we have the change in receipts for the third year, 800, negative 800. And then we had the change in repairs for the third year to be negative 6,000. We multiply it with our discount factor for the third year, which is going to be 0.751. Now this gives us our discounted cash flow for the third year. Now we also need to add the discounted cash flows for the year 0, 1, and 2 in order to figure out the total difference. And the discounted cash flow for year 0 was positive 41,000. Discounted cash flows for year 1 was negative 6,908.4. And then the discounted cash flow for year 2 was negative 9,333.8. And this will give our total difference. And the condition given in the question is that the net present value for the two buses would be the same, which means that the difference is going to be 0. Now we can just solve this equation in order to figure out the value of y. So that's going to be negative y minus 800 minus 6,000 times 0.751 equals to negative 41,000 plus 6,908.4 plus 9,333.8. So that's just going to be negative y, negative 800, negative 6,000 gives negative 6,800 equals to negative 41,000 plus 6,908.4 plus 9,333.8 divided by 0.751. So that's just going to be negative y equals to positive 6,800. And this value is negative 41,000 plus 6,908.4 plus 9,333.8 divided by 0.751, which gives negative 32,966.44. So negative y is just going to be 68,000. All right, that's just 6,800. There's an extra 0 there. All right, so it's going to be 6,800 minus 32,966.44, which gives negative 26,166.44, which means that the sale proceeds is going to be 26,166.44. This is because the negative and negative cancel each other out. This concludes the third part. Now we can move to the fourth one. We are given additional information. The accounting rate of return, ARR, of purchasing bus A was calculated as 24.56%. And the total net cash flows of years 1 to 3 inclusive for bus B amounted to 74,300. Now we need to calculate the ARR of purchasing bus B. What we need to know is that ARR is the annual net profit divided by the average investment times 100. So in order to figure out our ARR, we first need to figure out the annual net profit. Let's do that. And we are going to figure out the ARR for bus B. And we're also given the information that the total net cash flows of years 1 to 3 inclusive for bus B amounted to 74,300. So this includes all of the incomes for year 1 to 3 minus the expenses for year 1, 2, and 3. So this is definitely profit. But one thing is not accounted for, which is the initial investment at year 0, which is the present time. So the investment also needs to be accounted as an expense because we are initially investing that amount. So in order to figure out the annual net profit, we need to subtract our initial investment from this total amount of 74,300 and divide it among the 3 years, which is year 1, year 2, and year 3. Let's have a look at our initial investment. For bus B, that was 45,000. So we need to subtract this amount. Let's do that. All right, so that's just going to be 74,300 minus the initial investment of 45,000, and we also need to divide this among the 3 years because we require our annual net profit. So we're just going to divide it by 3. The annual net profit is just going to be 74,300 minus 45,000 divided by 3, which gives the total of 9,766.67. We can just round it off. So that gives us 9,767. Okay, so the annual net profit is just 9,767. Now we need to figure out the average investment. So average investment, this is quite easy. So this is just going to be investment divided by 2. And we know that our initial investment was 45,000. So that's 45,000 divided by 2, which gives our average investment to be 22,500. All right. Times 100. So the ARR for purchasing bus B is just going to be 9,767 divided by 22,500 times 100%. So this is percent, right? This gives our ARR to be 43.41%. What we can clearly see is that the ARR of purchasing bus B is way higher as compared to the ARR of purchasing bus A, which is only 24.56%. This concludes the 4th part. Now we can move to the 5th one. We need to advise Jason which bus he should buy. Okay, so we already calculated the net present value, and while doing so, we concluded that the net present value for bus A is higher than that of bus B. Let's write it down. So net present value is higher for bus A. And we also calculated ARR right now. And we figured out that the ARR was higher for bus B. So ARR is higher for bus B. But what we know is that net present value is considered better method of appraisal. So we can write it down as well. Net present value is considered better method of appraisal. We can also compare our initial investments, right? And the initial investment for bus A was way higher than bus B. You can write it down as well. Initial investment for bus A is higher than bus B. So if the initial investment is higher, then the payback period is also lengthier, right? So what we can say is that payback period for bus A is lengthier as compared to bus B. So if you consider the 4 factors, NPV, ARR, initial investment, and payback period, what we can see that for NPV, it is in the favor of bus A. For ARR, that's in the favor of bus B. And initial investment for bus B is lower, right? So it is easier for Jason to finance it. So obviously, it favors in case of bus B as well. And the payback period for bus A is lengthier. And it is always better for the payback period to be as soon as possible. This just means that we get our initial investment back in a shorter period of time for bus B. So again, this is in the favor of bus B. So considering these factors, we can conclude that Jason should buy bus B. So let's write our decision clearly. Jason should buy bus B. Okay, this concludes the 5th part. Now we can move to the 6th one. We need to state one method of investment appraisal other than net present value and ARR which a business could use. In the 5th part also, we included the payback period, so we can write it down. Alright, this concludes the 6th part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.